Hey folks, Dan Bird here with the Daily Scan for the 28th of January. Today is Tuesday, so Technical Tuesday. I'm going to talk about candlesticks today and explain what they are and how to use them. I'm not a financial advisor. Anything I say is meant for educational purposes only. You need to understand your own trading style and make your own decisions. So I am not making a recommendation to buy or sell. Let's take a look real quick. By the way, it's 10 minutes till 3 Eastern time, so I'm doing this a little bit early today. We'll take a look at what the market is doing. We'll go to the market bias page and first look at the S&P. Everything is trying to recover. See, the S&P looks pretty good, making a nice end of day rally. So as I mentioned yesterday, the kind of news that we had that caused that big sell-off is oftentimes temporary. Now, that doesn't mean the market isn't going to go lower at some point because it is pretty stretched, but it's not today. So we had a nice reversal off of that news from yesterday. If we look at the NASDAQ 100, which was the big one that got hit, same thing. It's making a comeback as well. Ending the day at the high, ending right now at the highs. If it stays that way, it will be very bullish, be a nice reversal. And Bitcoin we'll take a look at real quick as well. Bitcoin is making a comeback, but it's kind of indecision today. So not as much of a rally as the other indexes. So Bitcoin might be maybe the weaker of all of them. It needs to get back above 106. It needs to get above 106, period. It needs to close above that to really resume the uptrend. But it might be forming a little cup and handle right now. So cup and handle is formed because the people that bought over here, this went down and they just want to get out of break even, which is over here. So they started selling, and that's these buyers selling over here. And then, but there aren't enough of them to push it down very far. So it goes down a little bit and then starts to curl back up again. Hasn't done that yet. But if it does, if it starts to curl back up, then this 106 area becomes even more important, because once it breaks out of that, then the measured move is from 92,000 right down here at the bottom of the cup, the distance up to 106. So that's about 14. So that implies a move to 120 if it can break through that. So we'll see if that happens. All right, let's first, before I get into Technical Tuesday, we'll look at where the market is right now. So you can see Bitcoin is at 102. Equities, the Dow, everything is up. NASDAQ is up the most, up 2%. Really having a great day. The NASDAQ 100, not quite as good as the overall NASDAQ, but notice the VIX is falling back. And I mentioned yesterday that while the VIX increased, it was still in the neutral zone. So it never went above 20. So it's still basically in a bullish configuration right now. And if we look at the sectors, all three of the aggressive sectors are on the top. Technology, communication services, discretionary, all near the top, and the ones at the bottom are all defensive. So the market has completely flipped around today. It's gone from a defensive stance to an aggressive stance today. So all of that news about DeepSeek might be behind us that quickly. Down here for industry groups, you can see discretionary, technology, semiconductors in particular, number 2, computer hardware, number 3, another technology, software. And then we've got materials with steel, communication services, the internet group is in there, discretionary, financials, technology. So 1, 2, 3, 4, 5. Half of them are technology in the technology sectors. And if we look at our top 10 list, you can just take a look at the little chart. Royal Caribbean having a banner day today. GitLab looking really good. CrowdStrike, fantastic day for CrowdStrike. All the ones, this is just trying to make a comeback there. CLS, which really got hit yesterday. It's trying to make a comeback, but that's not too impressive yet. And then Carnival, 2 Carnivals on here. They look great. NVIDIA is in the top 10. So NVIDIA is creating an engulfing candle. I'll talk about that when we get to the candles. But it basically, erased the whole, even though it opened lower, so it gapped down, but during the day, as it moved up and down during the day, today has completely engulfed that whole thing from a bullish perspective. So that might imply that NVIDIA might continue up. And then Datadog also having a great day today. So Datadog up 7.7%. So you can see the percentages over here. So all of those implying that that sell-off was overblown. Some quantum computing companies here on the bottom of the list. Geo Group had been doing really well. This is a company that runs prisons and deportation centers. So you would have thought it ran up before the election, but now it's heading down. Powell pulling back significantly, that one as well. We'll go one more down. Cure, there's MicroStrategy, not doing well. MicroStrategy, even Bitcoin was a little indecisive, but it was slightly up. But MicroStrategy is going the opposite, it's slightly down. Vista Oil and Gas, that's down. So those are the ones that are on the negative side. All right, I want to jump into candlesticks real quick, and then I'm going to show you how to use these. So the history, candlesticks basically is a great example of what I always say about technical analysis, which is it is a visual representation of investor psychology or trader psychology, market psychology. They were invented by the Japanese back in the 17th century. Basically, guiding principles were the what, the price action is more important than the why. So technicals more important than fundamentals, essentially is what this says. And if you think about fundamentals, you usually think about PE, but PE represents price to earnings. Earnings is the fundamental part of that, but price is the technical part of that. So even when you talk about PE ratios, you're bringing technicals into the conversation just by talking about price, because it's the most important part. All known information is reflected in the price. Buyers and sellers move markets, markets fluctuate, and actual price may not reflect the underlying value. So formation of candlesticks, here's how they're formed. They basically show you the real body. There's a body and there are different sizes. We'll get into that in a minute. And there's what's called a shadow or a tail or a wick on the top and the bottom of the candle. So there's an upper shadow and a lower shadow. And same thing, the one on the bottom is bearish, the one on the top is bullish. So this is basically representing that the open was down here. It traded through this range of the wick or the shadow, and it closed at the top up here. So that tells you that it opened, bears became in control, and then bulls took control, and at the end of the day, bulls were in control. The bearish one is the opposite. So same kind of thing. In this case, it opened up here and closed down here. But you can see the whole range that it traded in during that day. So here's a good example down here with hollow and filled candlesticks. And the easiest way to think about this is think of it as a window shade being opened or closed. So if it's an open or hollow candlestick, then the window shade was at the bottom. It was opened from the bottom and it was pushed to the top to open the window. So that is a bullish candle. On the other hand, with a bearish candle or a filled candlestick, the window shade was open up here at the top and it was pulled down to close the window. And in that case, that is a bearish candlestick. So that's the way to think about those, whether they're open or closed. So long or short bodies just basically tells you the intensity of the buying and selling. The longer it is, the more buying and selling there was during the day. The shorter it is, the less volatility during the day. They have funny names oftentimes. Maribozu, they can be black or white, so bullish or bearish, basically means that it opened and closed at the extremes of its range. So this one opened down here, closed up here, and did not have any shadow or wick either way. The black one opened up here and closed down here, but the same thing. Basically closed at the low, and this one closed at the open. Another way to think of it is this one opened and never went back, never went down, and closed at the end of the day just because the market ended. And this one opened right here and never went higher and just sold off all day long. And the only reason it didn't go lower is because the market closed. Long versus short shadows. So the long shadow means that in this case, it opened, bulls gained control, so they pushed it up. But by the end of the day, bears took over, pushed it back down. On the other side, it opened down here. Bears tried to push it down, but bulls took control and pushed it back up again. So just think of it that way. This is just a visual representation of market psychology. Spinning tops are indecision. So it goes up and goes down and ends it pretty much in the middle, kind of where it started. In the white one, it opened down here and closed up here. In the black one, it opened up here and closed down here, but they're very close to the center. So that's indecision in the marketplace. Dojis are candles that have very little body. So they might have a little bit up or down, but very small amount of body. So that's really indecision. It's very extreme indecision. Things just aren't going either way. Bulls and bears are at a standoff. A doji, on the other hand, and this is a doji here. This is also a doji because it opens and closes right near the same place. But one is bearish in nature, and the other one is bullish in nature. And you can just tell that just by thinking about what they represent. In this case, it started here. Bulls tried to gain control, but bears pushed it right back down to the exact same place. Same thing over here. Bears trying to gain control, but bulls pushed it right back up to where it started. Trend is important because, especially with dojis, because it will tell you what maybe the next one that's coming. It will have some predictive power, but you always have to wait for confirmation. Wait until the next one confirms what it's implying. So in this case, if the trend is up like this and there's a doji at the top, especially a spinning top like that, it basically means that the trend has been up, bulls have been in control, but all of a sudden there's a standoff, bulls and bears becoming equal, which means that bears might now be gaining control and start pushing it down, but you don't know that until you get the confirming candle the next day for both of those. Long black candle, it's the same thing. In this case, bears were in control, the trend was down, and then you get a spinning top like this, which means indecision. So the bulls and the bears are now at a standoff, and all the bears that have been pushing it down might be beginning to be overwhelmed by new bulls coming in to push it back up again. And then the length of the doji basically, again, reflects the indecision, but also shows you the width or the range that it was traded in for that day. Dragonfly and gravestone dojis. Now, keep in mind, again, it's the psychology. Think about the psychology. But in this case, it opened up here and went, bears tried to push it way, way, way down. But it came all the way back and closed right at the open. So this is a very bullish candle, and this is a very bearish candle. Now, those bullish and bearishness, it's really important to understand where they are in the trend. So in the case of the dragonfly, if the trend had been down, and then you get something like this, that's a clear indication that the trend is about to change. Sorry. Same thing with the gravestone doji. If the trend had been up and been moving up for a while, and then you get something like this, where the bulls try to continue to push it higher, but the bears now took control and pushed it all the way down again. That implies that it could be a reversal. Now, for a reversal to be the case, there has to be a trend to reverse. So just seeing something like this in the middle of a trend or in something that's going sideways doesn't really imply anything. But if it's a clear downtrend in this case, then that could be a reversal. If it's a clear uptrend in this case, then this could be a reversal. So that's dragonfly and gravestone dojis. Bulls versus bears basically just shows you, in this case, that the shade is open, so that's bullish. The shade is closed, that's bearish. These two are the same thing, but just without as much volatility. We're going to take a look at these two in a second, all four of these in a second, and then you've got indecision over here on the right-hand side. What they don't tell you is what happens in between. So it doesn't just start here and go up here. It could go up and down and up and down and up and down inside of here, and just happens to end up here. So it doesn't really tell you what happens during the range during the day, but it tells you what the overall day looked like, or the month, depending on what your time frame is. Prior trend, as I mentioned before, is really important. So star position is essentially a indecision candle at the end of an uptrend, implies perhaps a downtrend beginning. And the same thing with something that has been in a downtrend. If you get indecision at the bottom of that, that implies that an uptrend may be starting. Harami is something that's inside of the previous day's move. It's called an inside day. So in this case, you had a big move up, and then you had a day where there wasn't much volatility, and it was lower than the previous close, but it didn't move much. It was up and down. Same thing with this one. So those are inside days, and you don't really know what that's going to do until you get the confirming candle the next day. So hammer and hanging man, you've heard me talk about hammers, as well as we'll talk about the shooting star in a minute. But hammer or hanging man, what you call it depends on where it is in the trend. So if it's at the bottom of a trend, regardless of whether it's bullish or bearish, so regardless of whether it's open or closed, if it's at the bottom of a downtrend, it is a hammer. If it's at the top of an uptrend, it is a hanging man, and they will mean different things. So here's what it looks like. Here's a hammer, clear downtrend, and then you get bears trying to push it down again, but now bulls are taking over, and the character is about to change of this trend. Same thing with a hanging man, but a hanging man is at the top of a trend. So when the trend is going up like this, you don't call that a hammer. You call that a hanging man because it is actually a bearish, potentially a bearish reversal. In this case, again, you wait for the confirming candle, and in this case, it reversed the uptrend for that hanging man. Same thing with inverted hammer and shooting star. And I've talked about shooting stars before, but shooting stars typically are found at the top of an uptrend. So again, you've got a long uptrend. The bulls tried to push it higher, but the bears took over, took control, and pushed it lower, regardless of whether it's bullish or bearish, with this big long wick or shadow on it. That is a bearish reversal candle. Again, you need to wait for the confirming, but these are pretty reliable, I found. So inverted hammer is after a downtrend. The inverted hammer is a reversal back into an uptrend, but it needs to be at the bottom of a clear downtrend. And then at the top of a clear uptrend is a shooting star. And shooting stars are pretty reliable. It usually means that the trend is going to reverse. It doesn't always mean that, but many times it does. So you need to wait for the confirming candle, but oftentimes that uptrend reverses on a shooting star like that. And you can blend the candles together. This is more advanced candlestick patterns, where you can combine two of them together, and you can see it kind of makes that third one, the hammer. So this is a bullish engulfing. I mentioned engulfing candle for NVIDIA. So this white one is an engulfing candle. In this case, this was the range it traded in the day before. It opened lower and closed higher. So it actually engulfed completely the previous day. So those two together actually make a hammer. And the same thing on the opposite side. Bearish engulfing on the bearish. So you get a bullish candle, and you get the next day you get a bearish engulfing. That's the same as a shooting star. Also, piercing pattern just means it ended somewhere in the middle of the range of the previous day. Blending candles, this is 3 white soldiers. So 3 days up is the same as 1 long day up, and 3 days down is the same as 1 long day down. So that's the way candles work. I'm going to show you a search. We're going to do that in the daily scan today, but a couple of books that would help you if you want to understand candlesticks a little more. There's a lot to it. This was the basics. These are the key ones, the main ones that you might want to look at. These are some of the books that you can check out. All of this is found on Stock Charts in the Chart School section, and I don't think you need a subscription in order to study these. So I recommend you go over and check those out. But for those that are subscribers to the website, you can go to the charts page, and right down here, chart and candle pattern cheat sheets. And I showed you this when I went through the chart patterns, the ones on the right. But this is a cheat sheet for candle patterns as well. It shows you all the bullish ones on the top and the bearish ones down here on the bottom. Just in case you see something and you're not sure what it might be, this will help you understand what they look like. All right, so let's go take a look at a scan. Let's run a scan. By the way, if anybody that was interested in Planet Fitness, it had a nice it was actually in a big long squeeze right here, broke out of the squeeze, went up and then pulled back. So this was on the reversal scan. So before I get to the hammer scan that I'm going to show, I'll take a look at the ones that appeared here on the reversal scan today. So Planet Fitness is one. Royal Caribbean had a great day. It's actually breaking out today. Trade Desk, it's actually still pulling back. So it has not really confirmed going up, but it's just started into a squeeze and it might be firing to the upside. What else do we have here? Gold, there's a gold miner. So it's sitting right at resistance, getting ready to break out right there as well. GitLab, it's sitting, getting right at resistance. This is where it had a failed breakout back here on the beginning of December. So it pulled back. This is a perfect place where you typically will see a handle for this cup. So watch that. This one might actually pull back the next couple of days and form a little handle over here. And then if it breaks out above 70, then it will be off to the races. The Honest Company, this is Jessica Alba's company. It's had a big, long downtrend. It's starting to make a run a little bit higher. Looks like momentum is starting to curl up. Still below zero, though. So still confirming a downtrend. But this could also form a cup. But we'll have to see. Not so impressed with that one. What else do we have over here? Apple, of course, made the list. So Apple is definitely making a comeback. It's right below its 50-day moving average, and momentum is definitely moving higher. So Apple looks to me like it is starting to take off again. So let's now take a look at the hammer scan. So I have a scan set up, and you can do this in stock charts. They actually have I've got a shooting star one there. Here's the hammer. They actually have a scan for a hammer. I modified it a little bit for my purposes. So if we run the scan, interestingly, there's a lot of hammers out there today. So here's Arista Network. Now remember, a hammer means it's a downtrend, and clearly we had a huge sell-off yesterday. So what that means is today, the ones that are trying to recover are forming hammers right there. So that is a bullish reversal. Now you do need to wait for the confirmation the next day. Here's Broadcom. Looks very similar. Little hammer on Broadcom. Core Z. Here you can clearly see the hammer right there. I'll make it a little bigger, and you can see it right there. DT Midstream, oil and gas. Nice little hammer there. GE Vernova. Same thing. LSCC. Now this one's not as impressive. It is definitely a hammer, but it still has a lot of resistance it needs to get through, including the 200, the 50, and the 21, and the 5. All the moving averages still has to get through. Pure Storage has had a pretty good run, and it moved sideways. Actually was in a squeeze right down here, and then came out of the squeeze and started higher. And then, of course, we got the sell-off yesterday, but that one may be recovering and might be headed back higher again as well. SI Time. There's the hammer. SoFi Technologies. There's the hammer right there. Vertiv. Another hammer right at the 200-day. So when you get a hammer and sitting right on a support level, a key support level, that is actually doubly confirming. So that one might be heading higher. Again, you want to wait for confirmation. We don't know if today is just a dead cat bounce. So we just see if the market's going to move higher after today. So that's it for candles. So you can see the candles over here. Hopefully now you start to understand what they mean when you see candles like this. You know, this one right here, that's a Marabuzo, because it opened here, closed here. There's no wick or shadow at all on that one. That is extremely bullish. Went up and then it pulled back, then started going higher. So each time this pulls back to the 50, the 21, it moves higher. Right now it's right at the 200-day. So looks like lots of reversals out there today. We'll see if they follow through tomorrow. It'll be really important. Tomorrow's market will be really important. And one thing you can do here on the website, and this is open for anybody, don't need a subscription for this, just go to breakpointtrading.net. And if you want to look at the current earnings calendar, and we want to look at NASDAQ 100 stocks, we can see the upcoming earnings. There's Starbucks coming up, ADP, T-Mobile before the market tomorrow, Meta after the close tomorrow, Microsoft after the close tomorrow, Tesla after the close. So 3 big ones tomorrow. Apple right here, also after the close on the 30th. So that's the day after tomorrow, Thursday. Intel coming up. So there's lots of technology stocks. There's Palantir. That's actually next week after the close. And AMD. So we've got 4 of the Magnificent 7 right here tomorrow and the next day. And you can look at each of these. And we can look at Apple. Look at the chart for Apple. And look at that candle swing right at the 50-day moving average. And then I can go to the Magnificent 7 if we want to look at each of those in succession. And we can see there's Google. There's a little hammer for Google. Here's Amazon. Amazon actually has looked great. Even with the sell-off yesterday, it went right down to the 21 and then bounced all the way back up again. And today it's breaking out. So Apple actually looks fantastic. I'm sorry, Amazon. Apple we looked at already. Here's Meta. Again, you can see the 3, 4 white candles in a row. That is very bullish. So everything is looking extremely bullish for Meta. Didn't really have any effect at all. Microsoft, pull all the way back to the 200-day, and you can see it's an open candle. So it opened down here and it closed up here. It's a bullish day, closed above the 21 and the 50, and today just took off. So it's up 3% today. That one looks good. NVIDIA is, remember the engulfing candle? You can see it right now. It's not exactly engulfing yet because it hasn't come back to the top of the previous day's wick right there, but it is pretty close. I mean, it's still bullish, and you need to get confirmation the next day, but up 7.7% today. So NVIDIA had a great comeback today. There's Tesla. Again, Tesla reports day after tomorrow. It has a hammer right there as well. Notice the shooting star right there. Remember, a shooting star means usually is bearish or usually a trend reversal. You see this one right here? That is not a hammer. That is a hanging man. So in this case, when you get it at the top of a trend, that is a reversal candle the other way. If you have the same thing at the bottom of a trend, then it's a reversal candle back up. Down here, you see a spinning top reversal and then confirmation the next day. So that would be the day to get in on Tesla right there. Right here, this is not a hammer. It's in the middle of a trend. So that is not a hammer. And the hammer needs to be at the bottom of a trend. It's like something like that or like this. And again, you don't know if it's at the bottom until you get the confirmation the next day. So now that you understand candles a little bit, you can start to see them. You can actually look back and see what candles looked like in the past and how the stock reacted to it. There's Netflix, which has hung in there really well. There's Costco. Here's Palantir. Palantir right now has a very bullish candle. There's the shooting star right there, even before that big sell-off. So that shooting star was the warning. Here's a shooting star over here on Palantir before this big sell-off. This one down here is a spinning top. So that's just one way to use. Here's a bearish engulfing candle. So it opened higher. We had a white one, a bullish one, and then it opened higher, but it sold all the way off and completely engulfed the previous day. That is a bearish candle, although it just went sideways from there and then went up a little bit after that. So here's Arista Networks. Beautiful hammer on that one. So that one looks like it's trying to reverse as well. And Broadcom. I showed these before. There's a dragonfly, which is also a hammer. but it's a dragonfly, meaning it came all the way back to the open, and it might close. Right now it's 3:20 in the afternoon. So this one up here just before this big sell-off. Big sell-off was on Monday. This candle was on Friday. That was a spinning top. Gave you an idea ahead of time that it might be reversing. So that's it. That's it for candles. Hope that helped. Let me know if you have any questions. And good luck trading. We'll see what the rest of the week brings. We've got some really important ones coming up for earnings. If they report well, and I don't see any reason why they shouldn't. In fact, if I look at the, let's see, Meta, I'm going to look at these from a relative strength perspective. So here's Meta. This first one, the blue one, isn't outperforming its peers. If it's above 0, then yes, it's outperforming its peers, and it's actually getting stronger because it's above its moving average right there, and it's outperforming the S&P. So the red one is the S&P. It's above 0, so it's outperforming its peers and the S&P. Its sector is outperforming the S&P right there. Its industry group, which is the internet group, is underperforming its sector. So the internet group is underperforming communication services, and then the internet group is actually outperforming the S&P. This one right here. So that's what I like to look at a lot of times going into earnings, as well as the AD line, the advanced decline line. The accumulation distribution line, which up here you can see Meta has been having lots of accumulation lately. So let's look at Apple. Apple, great accumulation up there. It's now it has been outperforming its peers, and it's just now getting back to outperformance again. Just barely outperforming the S&P. So what else? Microsoft, the accumulation distribution has just been moving up the last week or so. And keep in mind that when companies are going into earnings, the earnings is 129. Usually about 30 days before that, they have a quiet period where they can't talk to analysts. So analysts have to make their decisions prior to that. So that's usually where you see the AD line start to increase when they've made their decision to get back in, because they can't talk to the companies just before earnings. And down here, it is significantly underperforming its peer group in software. And Microsoft is significantly underperforming the S&P. So those two things are not good. And you can see because it's been going sideways, that's the reason. So the accumulation distribution might be implying some better news for Microsoft, but it really needs to outperform here soon. All right, that's it. We'll see what the earnings bring. I have a feeling they are going to come in good, and the market will react. So the rest of the week, we might be getting back to previous highs again. That's it for today. Thanks. Please like and subscribe, and let me know if you have any questions or anything that you would like me to look at. I'd be happy to do that. Thanks, everyone. Take care.